Do I need to pay estimated taxes on required minimum distributions, RMDs, in retirement? As you prepare for retirement, you might be wondering about the tax responsibilities that come with it. One important question is whether you need to pay estimated taxes on required minimum distributions. Required minimum distributions are mandatory withdrawals from your traditional individual retirement accounts and other qualified retirement accounts, such as 401(k) and 403(b) plans. The first required minimum distribution is due by April 1st of the year after you turn 73. After that, you need to take your distributions by December 31st each year. It is essential to understand that these distributions are treated as ordinary income for tax purposes. This means they will be included in your taxable income and can affect your overall tax liability during retirement. Now, let's talk about estimated taxes. Estimated taxes are payments made to the Internal Revenue Service on a quarterly basis to cover tax liabilities that are not withheld from your income. If you are receiving required minimum distributions, you may need to pay estimated taxes to avoid any penalties. The Internal Revenue Service requires at least 10% of your distribution to be withheld for federal income taxes unless you specify otherwise. However, this withholding may not be sufficient to cover your total tax liability, especially if you have other income sources or find yourself in a higher tax bracket. To manage your tax obligations effectively, you have a couple of options. First, you can choose to have federal and state taxes withheld from your required minimum distributions. This can help you avoid the need for estimated tax payments, but keep in mind that it may not cover all your tax obligations. Second, if you expect to owe more than $1,000 in taxes for the year and your withholding from other sources, like pensions or Social Security, is not enough, you may need to make those quarterly estimated tax payments. It is also wise to consult with a tax professional. They can help you navigate your tax obligations and ensure you are not overpaying. They will assist you in determining the best strategy based on your overall income and tax situation. Effective retirement tax planning is about managing your required minimum distributions and other income sources to minimize tax liabilities. One strategy is to time your required minimum distributions. You can take your first required minimum distribution by December 31st of the year you turn 73, instead of waiting until April 1st of the following year. This can help you manage your tax obligations across different years. By understanding how required minimum distributions and estimated taxes interact, you can better manage your retirement finances and ensure compliance with tax regulations.